Good afternoon, good morning, good evening from wherever you're watching. My name is Chloe Hartfield, and I'm joined here today by Karen Sentimbrino, and we are going to talk a little bit more about some of the critical items and considerations that you guys may have when it comes to unifying Oracle HCM and Oracle ERP, specifically when it pertains to payroll costing and the general ledger configuration. To start out with a high-level agenda of all the key items that we're going to be talking about today. So we're going to take just a few minutes to level set and introduce ourselves. Then we're going to set the stage with doing some high-level education around some of the critical objects that will be defined and how they relate to the general ledger and payroll. We're going to talk about some of the best practice design considerations and impart some wisdom that we've gained over the years onto you guys. Integrating payroll and Oracle GL. And then, from a process perspective, once you guys have payroll live, how are you managing from an error perspective with reporting, reconciliation, and then taking an approach where your organization is really evaluating not only kind of the system design decisions that need to be had for a project like Oracle ERP and HCM for payroll costing to be a success, but how organizationally your teams across HR, IT, and finance are aligned to the success of this project. I will introduce myself and then I'll pass the mic to Karen. So my name is Chloe Hartfield. I've been with Alithya for the past 3.5 years now. I'm a principal solutions consultant focusing on Oracle ERP. Through the years, I've had an opportunity to work with clients across healthcare, across financial services, retail, manufacturing, and when it comes to having to have these organizations be able to pay their employees, the importance of that process is critical across all these organizations. So kind of bringing to light and bringing this perspective of the ERP considerations and how we design the chart of accounts, the general ledger to be successful. Fun fact about me, so it's not all serious for the 35 minutes we're together. I'm based in Austin, Texas. I worked at Oracle in a past life as an ERP SE, and that's kind of how I made my way to Alithya. Karen?
Thanks, Chloe. Good afternoon, good morning, good evening, everybody. My name is Karen Settembrino. I am the product director for HCM for Alithya. I've been here approximately 5 years, and I am currently an Oracle ACE Pro, a designation that Oracle gives to people who have a significant impact on the Oracle application. My specialty is payroll, and I've been in the payroll industry for well over 40 years, and I've been working on Oracle products, both EBS and cloud, since 1998. I came from, as far as the cloud is concerned, I came from development. I worked for Oracle Development as the US legislative analyst before I came back out into the implementation world. Fun fact about me, I'm a huge Peanuts and Disney fan.
Well, it's nice for you, Karen, because you're pretty close to Disney, right?
Yes, I am. I'm in Tampa, Florida. I'm an hour and 8 minutes door to door to Epcot. And believe me, I know from many times going.
That's awesome. Well, thank you. So, now that we all are a little bit more acquainted, I think we can kind of kick it off and get into the meat of our discussion today. So, when we think about organizations that come to us post going live with Oracle HCM and Oracle ERP and are leveraging those systems for payroll costing, we kind of hear that there was some missed opportunities when it came to aligning across the teams and how some of the critical objects that need to be centrally maintained were built that have kind of downstream impacts across payroll costing. We talked about kind of how maybe the systems that they're currently on as they're evaluating moving to ERP lack the automation and the capability to support some of the payroll processes that they want to see taken from that manual process and automated as best that we can within Oracle. And so we're going to talk a little bit about today, not only from a system perspective of best practice designs that you guys can take on, but also looking at road mapping and long-term system planning, and really aligning stakeholders across your different teams so that we have the right level of involvement so that you're building your Oracle ERP and HCM system for payroll costing with optimization in mind. We'll kick that off by kind of doing a little bit of a deep dive into understanding the relationship between general ledger and payroll. So let's begin by looking at the relationship and how general ledger and payroll are aligned through the lens of your chart of account structure. What you can see here is your chart of account structure, and it's broken out by segments. You can define your chart of accounts as one of the kind of critical objects at the beginning of the project to reflect, the financial and operational reporting that you're looking to have when you move into Oracle. When you think about the segments of your chart of accounts, right, the three critical segments that you're going to define are going to be your company, your cost center, and your natural account. And once we have those segments defined within the chart, you may have additional segments, right? You could have project, you could have intercompany, future segments, such that if you continue to grow within Oracle, you need something that, from a chart perspective, will allow you to scale. But once you've defined those segments, within those segments, we're going to define what we're calling value sets. And those value sets are going to define the valid values within each of your FlexField segments that you're going to be able to tie and generate accounting across. And this is applicable across all your accounting entries and is especially applicable for your payroll costing. They're going to give you control over what data flows into your GL and how it's classified. They're going to give you control whether it's allocating payroll costs to departments, projects, or grants as they're identified within your segments. And this is going to ensure, two main things, right? Consistency and accuracy in how these costs are landing in your books. And when we think about kind of where you're defining the chart of accounts and then you're defining your value sets, how we're going to bring together the general ledger and payroll costing is really going to be through what we're defining as our accounting key flex field and our cost allocation key flex field, because these two objects within the system are going to share the same underlying value sets, and it's going to be intentional, right? Because when we think about from a maintenance perspective, if you guys are, making adjustments within your chart of accounts that are not being communicated down to the HR systems, and there's a change in cost center values, and, we're not communicating those changes, like the system's not going to know essentially where to pass through some of those payroll costs because, the system is going to look at how you define your accounting key flex field and the cost allocation key flex field. One item that I think that's worth noting now is that once you define your chart of accounts, that structure is in place, and if there are any major changes, it could lead to a need for chart of account remediation or even reimplementation. And the key flex field structure alignment is the same. Once we define those key flex fields, we can't go back and make changes later on into the system. And so when we're building the chart, aligning the value sets, we're really urging our clients to think about what's the future growth plan, what are the reporting needs, and what are the integration touch points when we're setting up these foundations. The next piece of it, I like this visualization because it's kind of easy to see here on the left that general ledger chart of account, accounting key flex field, and how across company cost center account, we can see the mirror of those value sets when it comes to the cost allocation key flex field. So a little bit of education, right? So your accounting key flex field defines the structure of the GL. It's going to dictate, journals, how journals are categorized, whether they're going to be categorized by company, department, account, and they're defined how transactions are classified. It's really like a representation of your chart. And then when it comes to the cost allocation key flex field, this is what's used during payroll processing to determine, how the individual payroll elements like earnings, deductions, or taxes are charged across departments or projects. Really, it's a system looking at these two key critical items and saying, for each of these payroll elements like base pay, overtime, how is it going to be costed when it comes to these different flex fields? We like to say it's like they're speaking the same language because we've identified that same value set.
One thing to keep in mind here when we're talking about the cost allocation key flex field in the chart of accounts is that the same structure, including naming convention, the size of each structure, as well as other information, must mirror from the chart from the cost allocation key flex field to the chart of accounts. Because there is a direct tie between the two, and as we build the costing from the payroll to the general ledger through through the subledger, we set up all of this information to tie it one-to-one relationship.
Exactly. And like when we think about it from a process perspective, right? Payroll, we'll start with four main steps. One, payroll processing. We're going to set up and run payroll, and the system's going to calculate earnings and deductions. And based on those calculations, it's going to then look at that costing key flex field, which, as you can see here on the screen, is a screenshot of the system, looking at and aligning that cost allocation flex field with that accounting key flex field. And it's going to determine that based on the amounts of earnings and deductions that are calculated, how it's going to distribute across those various accounting segments based on predefined rules that are going to come from the costing hierarchy. And that's what's then going to come in and flow from that costing key flex field through into journal entry creation, such that these allocated costs are going to conform to kind of that chart of account segment that's been defined in the accounting key flex field, to actually create and represent journals that will then go in and flow to the general ledger. I think this, when we think about from an alignment perspective, this is going to help to support reduction in mapping errors. It's going to simplify reconciliations. And that's why it's so important at the front half of these projects to design these flex fields strategically, with input from both HR and finance. When we're working with clients at the front half of these projects, it's we have dedicated design workshops that are aligning these flex fields, and making sure that they're going to be scalable and reportable across the enterprise. And Karen, I think you brought up the good point, is that now that we've talked a little bit about kind of how the GL structure gives way to capture the payroll costing piece, it may be a good time to talk a little bit more about the details of kind of what can be defined from, a cost hierarchy perspective.
So what happens is there are certain areas within payroll and the definitions of different components of payroll. So if you think about an employee has an assignment information, which tells the system what, where, when the employee is doing, right? The person information is the demographic, like the name, address, social security number, date of birth, but the assignment has the information of what is the employee doing or the job, where is the employee working or the location, for whom the employee is working, a department, etc. What we can do within payroll is we can take various components, such as these levels, and define the costing to sit at each of these hierarchy levels. So we have a limited places to be able to assign the costing, but each of those places has to equal a segment that is going to exist in the general ledger. So as an example, you would see from the chart that Chloe had provided earlier, there was a company, what is known as a cost center, and a natural account. What happens is when we look on the payroll side, we're going to map that company segment, that cost center segment, and that natural account segment on the payroll side. So, as an example, cost center actually equals the HR department. So, there's a one-to-one relationship between the two. So, when we look at the cost center, we would assign the cost center information to that department. A lot of times we work with organizations that have multiple companies. So we would also assign the company to the department level, because most times the department, if it crosses companies, you're going to have the two segments that define that. You can have company A, which would have company 01 and department 100. And then you could have company B, which would be 02 and also department 100. So that combination or that information or those segments would reside on the department. You could have location costing, meaning if you want to define a costing for a specific brick and mortar location. You also could have job costing. So in other words, you might create a lot of times what we'll see for clients is that they have a sub account. They want to break down their salaries to a more minute detail. So they would say regular salaries, but for, as an example, for a registered nurse in the healthcare industry would be a sub account of a registered nurse job. So we have various levels within the hierarchy in order to define how each of the segments of the chart of accounts defined in the cost allocation key flex field can work directly with the chart of accounts and work as far as the immediate and the integrated uh, connection between payroll and the general ledger.
Karen, what if I said I wanted to do payroll costing at the person element level?
So what happens is that there's a breakdown that you can assign to a specific person. And just to clarify what an element means, an element within Oracle Cloud Payroll means an earning, a deduction, or a tax, or an employer liability. So as an example, if you want a specific earning to be costed differently to a person because of the job or the role that they play or any other information, then you'd say it's only specific to that person, may not be specific at another level in the hierarchy. You can assign the costing to that person at the element level or the person as the assignment level. So Oracle Cloud Payroll gives you a significant amount of opportunities through this hierarchy configuration to assign the costing. And then when the calculation of pay occurs, it looks at each level of the hierarchy to determine the full account string that's used to send to the general ledger.
Nice. So it sounds like there's a lot of flexibility.
A lot of flexibility, yes, but what needs to be understood very clearly, and Chloe, this goes back to the statement you made earlier, in order to make sure this design works for your organization, you must start your project with a design of the chart of accounts. So in order to be able to clearly design how the cost allocation key flex wheel is going to work. So the chart of accounts drives a lot of how core HR is set up, because we need to make sure, as an example, the cost centers are one-to-one relationship with the departments. There's a lot of information that goes between core HR and payroll and then the general ledger. So these conversations have to happen at the very beginning of your design and your business process workshops to ensure that not only during implementation, but post go live as well as in the future, you have what you need both from a payroll perspective in calculating your pay, but also from the general ledger's perspective in reporting and ensuring that your financial statements are accurate.
Absolutely. I think that's about, I would say, a perfect transition into some of the next items that we're going to talk about. I think you really hit on a couple of them, right? Of what are the key considerations that, we want you guys to move forward with when it comes to best practice design. And you touched on it just recently, right? And, when we're designing our chart of accounts, we're making sure that we're taking what, at Alithya would call a financial reporting first perspective, to where we're not only building a chart of accounts that's going to be able to manage, all of the financial reporting that we need to generate, but also making sure that we're able to generate, payroll costing to the level of granularity that needs to be captured through the chart. I think the other item we touched on, and we can dive a little bit deeper too, is aligning those objects, right? So looking at, across departments and cost centers, across locations, job roles and job classes, making sure that these critical items are defined and aligned across HR, finance, and IT. And then diving a little bit deeper into, from a system configuration, how all of these different elements that will be built through the duration of the project come to life once we actually are transacting and processing within Oracle payroll. On the chart of accounts design perspective. So, as you can see, and we've looked at this graphic a little bit earlier, but really the chart of accounts is the backbone of both your general ledger and the payroll costing setup. Each of the segments is defined through, company, a cost center, account, project, and defined by value sets. And that's controlling which values are valid in each of the segments. But really, the key point, like Karen said, is payroll design and build cannot begin until the chart of account is defined. If you think about all of the different inputs that we need to plug into the system when it comes to capturing all of those different payroll costs based on the hierarchies that you define for your organization, all of those, the earnings and the deductions that are calculated need to have a place to land. And from a project testing perspective, one of the first things that we're working with you guys to do is to define the chart of accounts, not only because of the criticality of its use when you're standing up ERP, but also the criticality of its use when it comes to the design, build, test, and deploy from a payroll costing perspective. When we think about kind of the approach that we take, right? We're looking at the chart of accounts as it supports the accounting key flex field, the cost allocation key flex field. We're making sure that on the financial reporting side, our chart gives way to clear and consistent views of revenue and expenses, assets and liabilities. And on the payroll costing side, making sure that that chart gives way to ensuring payroll expenses are categorized accurately by department or project or other cost centers. I think about some of the critical questions that we're trying to answer when it comes to payroll costing and how we're defining the chart is, we're trying to understand, will your organization need to report payroll cost by project or by grant? Do you need to track labor cost by department, job, or employee group? Are there any other legal or regulatory reporting requirements that we need to take into consideration when it comes to the chart? Um, and when we're defining the segments, right, we're looking for consistency such that segments are mirrored, like company, department, cost center account across both GL and payroll. We're ensuring that we have value set alignment for those key accounting flex fields and the cost allocation flex fields, but that we're also defining and designing the chart so that it's going to be scalable, not only for your organization to support the growth that you anticipate now, but also future growth, whether that comes from adding new departments, new cost centers, or expanding, internationally, right? And in order to do that, we've touched on this a little bit, but it's critical in bringing together stakeholders at the beginning of the project, which is a part of one of the key activities that we'll do at the very start during project planning is assigning kind of a chart of accounts lead, assigning a payroll lead, assigning a core HR lead. And sometimes the chart of accounts lead and the GL lead are the same person, but it may be a different person. So assigning a lead to that and bringing all of those stakeholders into the room when the chart is being defined such that everyone's requirements are being captured and accommodated for. I think the next critical item when we think about best practice design is really aligning our system objects across Oracle HR and payroll and Oracle GL. And when we say that, we're aligning cost centers in the chart to departments. We're aligning locations to locations, job classes to job classes. Karen, you talked about it, right? Is it consistency matters when we're aligning these objects because payroll costs calculated based on departments or jobs much must then match the corresponding cost centers or job classes in the GL. Additionally, we're coming together to create kind of a centralized process for how we manage change because if there are changes made to the cost center structure within the GL, or not the structure, but just even the values, we have to ensure that that is reflected then on the HCM side, the HR side.
The only thing I would like to add here is the fact that one of the biggest and most difficult aspects of all of this is understanding the alignment between the cost centers and GL and the HR departments. A lot of times it's not realized how closely tied they are within the Oracle application because it is truly a one-to-one basis. And it's very important to understand that because if you have a different alignment, let's say different naming conventions or different numbering schemes, whatever the circumstance may be, you're not going to be able to use the scale that Oracle delivers in the integration perspective of sending the payroll directly to the general ledger as designed. So that's the one area that I think people should take a more time consuming and more effort towards looking at ensuring that the cost centers and the departments equal. And as early in the project as you can do that, the better off you are.
Absolutely. And I think that all kind of plays into, from a system configuration perspective, kind of how we approach our best practice design to streamline and leverage the automation that's coming out of Oracle when it comes to the payroll costing process.
Right. So what happens here is the considerations we need to make sure, as everybody understands, payroll is downstream from core HR, from benefits, from absence, from compensation, time and labor, and all of these different modules that have data inputs. And what happens is payroll takes all of these data inputs and creates the gross to net calculations and all of the related expenses that happen for payroll as the employer liabilities, deductions, taxes, etc. But what is important to understand is that the general ledger is downstream from payroll, right? So when we take all of this information and all of these key inputs within payroll, we need to make sure that we clearly understand how the costing works in payroll because we want to make sure all this downstream impact that we have from different modules then is appropriately posted into the general ledger for financial reporting. And where it comes into play considerably is in the hierarchy. Where we post and where we place the different segments of the chart of accounts and the cost allocation key flex field has a very, very significant impact on how the GL account string works for each individual earning, tax, deduction, employer liability. Oracle costing for payroll is a dual entry. So for every single earning, you're going to have a debit and a credit. For every single deduction, you're going to have a debit and a credit. And how the system generates that account based upon the number of segments in your chart of accounts and your cost allocation key flex field is based upon where this information lies in the hierarchy. So one of the very important pieces is that that payroll is involved in the original conversations when it comes to looking at the chart of accounts. So we have cross-pillar meetings at the very beginning of the project, working with the payroll team and the GL team. One other thing that we ensure and Oracle requires is being able to have a suspense account. And this suspense account gives the system the ability to be able to post to a valid account that needs to be reconciled every single payroll to make sure nothing actually hits there because You don't want the process to stop going to the general ledger because maybe there's one issue with one element or one person. So when things don't work exactly right, it posts to the payroll suspense account, and then you could do an analysis and make sure you fix and maybe do manual journal entries or fix within payroll. So that is really important as well.
Absolutely. And I remember when we were preparing this, we were joking, like, not to be confused with suspense accounts on the general ledger side, but these would be suspense accounts specifically for payroll to capture those calculations that didn't have a place to land.
Correct.
Awesome. And I think, we talked a lot about, all of these different items and elements and kind of how we need to design with the idea that they will need to be integrated. Because exactly like you said, right, from a general ledger perspective, that's the downstream system where payroll is sending information for it to land. And so when we think about, integrating payroll and the GL, here are some of the key items that the system allows and provides with you through its inherent, design and capability to manage the payroll process.
So what happens is during the payroll calculation process, there are four different ways that costing is generated. One is the calculation of payroll, where you're doing all of the employees that are assigned to that particular payroll, and it automatically generates the costing. You don't have to run a separate process for it. In addition, there's something called a quick pay within Oracle Payroll, and that's a calculation of gross to net for an individual employee. Again, the costing is automatically generated for that. Then you have reversals. These are when maybe you have to reverse an employee's pay because they should not have gotten it, or it was wrong, or whatever the circumstance. So you want to make sure that the costing is generated for all the negative values, reversing exactly what happened in the original case. And the last thing we have are what are known as balance adjustments. Those are if you have any cash impact that you need to adjust a person's balance. Let's say you need to adjust the federal income tax, or you need to adjust Social Security or Medicare tax, whether it's the EE or the ER. When you create your balance adjustments, you also generate costing for that as well, as long as there's a cash value. So that's how generation of costing results happens. Fortunately, it happens automatically. You don't have to run a separate process to generate the costing. And what we mean by generate the costing is it takes a look at the particular earning or deduction, or whatever the circumstance may be, looks at the hierarchy and pulls the values of that particular earning or deduction based upon all segments in the hierarchy. So if you have an 8-segment chart of accounts, your account string for that earning or deduction is going to be eight segments long. There are such things also as cross-validation rules. So an example of what a cross-validation rule may be is if you have deductions such as federal income tax or Social Security from an employee, or Medicare from an employee's pay, or you have involuntary deduction like a garnishment, or a voluntary deduction like a union dues, or even a pre-tax deduction. You normally in gap processing, you don't usually assign a cost center to a deduction because it's a pass through. So I've seen an out of the box standard cross validation rule says you should never have a cost center or an HR department on a liability account. And if you have that by accident and you try to send that over to the general ledger, it will give you an error saying that that's a cross validation rule error. So you can, on the GL side, set up rules that say these combinations, these account combinations should not happen. And this way, it protects the general ledger values that are being posted to the GL. There are ways of looking and seeing if you have issues with these cross-validation rules before it tries to post to the general ledger, but it's to help protect the values that's in the general ledger to make sure the source of information is correct. Um, as far as error handling is concerned, there's a couple of different ways that error handling can happen within the system. Most times, or what we recommend within Alithya, is you should always run your transfer to general ledger process in a draft mode and see, are you hitting any cross-validation rules? Another example of a good rule that causes it to fail is if you don't have an open accounting period. The system will let us know whether you have an accounting period or not, an open accounting period. So there are various things we could do as far as error handling from the payroll side that will help us determine and make sure we have a clean entry going to the general ledger.
That that all makes sense, and I think it gives way to our next topic, to where once we have all of these system objects designed, defined, and integrated, what can be our approach when it comes to looking at the outputs of payroll costing, and confirming those with reporting and reconciliation. I think this diagram does is a pretty clear visual, right, of like all the different steps that you would take when you're kind of evaluating these outputs.
Exactly. So what we recommend in the very beginning is that you run your validation reports, your reconciliation reports, things like your gross to net report against your what was known as a payroll activity report, against your costing report, right? And you want to make sure that the reports across the board equal, or you're seeing the values that you want to see. And then you're going to run your process, which is the create accounting process, which sends the money to the GL in a draft format, which will then tell you whether or not you have any issues. If you're seeing errors, then you're going to address the errors at the very beginning of the payroll before you move to a point where you can no longer do that, meaning you've issued your EFT or your ACH file to the bank already. You filed your taxes for that particular period. So you want to make sure your general ledger is getting the clean data as soon as possible. If you see no errors in this validation report in the create accounting in the draft mode, you can then continue on for your payroll processing and issue your checks, your direct deposits, your taxes, your pay slips, and all of those things. So it's an iterative cycle, and we recommend doing this at the very beginning so that by the time you actually have to post to your general ledger, you have a clean entry.
And I think that brings us towards the end of our session, where we kind of are wrapping up and talking about, we've covered designing the chart, aligning objects, configuring payroll costing, integrating with the GL, and how you then, troubleshoot and manage once you guys are actually up and processing payroll through Oracle ERP and HCM. But, the power of a successful implementation of payroll in the general ledger goes beyond just defining structures and building a solution. Once you guys are on the system and managing it, it's an iterative process, but it's also an iterative process to actually build, design, and educate all of your end users, in order to be able to successfully leverage the system. And so, a couple of the critical items that we like to call out, especially as it relates to an executive level stakeholder level perspective, is making sure that timing is critical. Your future state chart of accounts must be defined and leveraged when implementing payroll. So if there's an approach where you want to implement Oracle HCM and payroll before going live in Oracle General Ledger, you still need to define that structure. So, we always say and make a best practice recommendation to where either it's, we see organizations be the most successful by implementing the general ledger alongside payroll all in a big bang project approach, or we see organizations take an ERP general ledger approach where they're standing up the chart of accounts, have that well defined, and then standing up payroll afterwards. Additionally, we've touched a little bit on this is that, at the beginning of the project, we're not just having our HCM team go run and design and build a payroll system in a vacuum. And we're not having our financials team go run and design the chart of accounts and the enterprise structures in a vacuum. We have all of the stakeholders coming together at the beginning of the project. And from a client perspective, the roles and SMEs are clearly defined so that we can ensure that everyone is aligned and all of the critical requirements are captured. And lastly, I mean, planning is key, right? We're trying to understand here at the beginning, we want to ask the right questions. We want to understand, what level of cost granularity do we need? How will we manage new departments or cost centers? How are we going to manage this system, not only, now, but in the future once you guys are live? And so thinking about all of those different decisions at the beginning of the project to help you guys be successful. And with that, that was all we had prepared. Karen, is there anything I missed that we haven't talked about?
Not that I can think of. I think that this is a very good um, discussion around how important it is for payroll and general ledger to talk to each other.
Absolutely. I think it was great to talk to you and to go through this with you. So I appreciate it and appreciate to those that have been listening.
Thank you very much. And thank you for listening, everybody.